In the dynamic world of trading, a well-defined strategy is non-negotiable. It's the compass guiding your decisions, especially in the volatile Forex and indices markets. Imagine this: a major economic announcement hits the wires, sending ripples across the trading landscape. These news events are catalysts, often creating lucrative short-term opportunities for astute traders. Our strategy hinges on harnessing the power of these events, but not by simply reacting to headlines. We delve deeper, blending news sentiment analysis with technical confluence zones and volume anomalies to pinpoint high-probability trading setups. This strategy empowers you to anticipate market moves rather than chasing them. By understanding how the crowd reacts to news, combined with precise technical analysis, you gain a distinct edge. Throughout this guide, we'll break down this approach into manageable steps, demystifying the process of identifying and capitalizing on news-fueled liquidity grabs. Whether you're a seasoned trader seeking to refine your edge, or a novice looking for a robust framework, this strategy offers a clear roadmap to navigate the exciting world of news-driven trading. Let's break down this powerful strategy into 3 clear steps. Step 1. News sentiment trap. Begin by identifying high-impact economic releases like interest rate decisions, GDP reports, or inflation data. These events have the potential to move markets significantly. However, instead of blindly following the initial reaction, we look for signs of manipulation. Often, large players create fake moves to trigger stop-loss orders, trapping unsuspecting traders. Our goal is to identify these traps. Step 2. Confluence zone identification. Next, we pinpoint confluence zones on our charts, areas where multiple technical levels converge. These zones act like magnets for price action. Look for previous highs and lows, trend lines, Fibonacci retracements, or moving averages that cluster together. These zones, combined with order book analysis, provide crucial support and resistance levels. Pay close attention to volume profiles within these zones. High volume indicates strong interest and potential volatility. Step 3. Volume divergence filter. Finally, we introduce the volume divergence filter. This step helps us confirm the validity of potential setups. Look for divergences between price action and volume indicators like on-balance volume or the relative strength index. For instance, if the price makes a new high but OBV fails to confirm, it suggests weakening momentum and a potential reversal. This divergence is a red flag, indicating that the initial move might be a trap. Timing is crucial in news-driven trading. Once you've identified a potential setup using the 3 steps above, it's time to pinpoint your entry and exit points. Look for candlestick patterns like pin bars, engulfing patterns, or inside bars near the confluence zones you've identified. These patterns often signal a shift in momentum and can provide a precise entry point. Risk management is paramount. Before entering any trade, always determine your stop-loss level. Place your stop-loss just beyond the confluence zone or recent swing high or low, limiting your potential downside. Conversely, set your take-profit target based on the next significant level of support or resistance identified during your analysis. Remember, trading is about managing risk, not chasing profits. Sticking to predetermined entry, stop-loss, and take-profit levels ensures discipline and protects your capital in the long run. Section 4, Illustrative Example. Navigating a US CPI release. Let's say the US CPI or inflation report is due. This is a high-impact event that can cause significant volatility. Leading up to the release, we notice a confluence zone around a recent support level, marked by previous lows and a Fibonacci retracement. The market initially rallies on the news, but we see a large bearish pin bar forming right at our confluence zone, signaling potential weakness. Furthermore, we observe a bearish divergence on the OBV, indicating weakening momentum. This confirms our suspicion of a potential trap. We enter a short position near the pin bar's low, placing our stop-loss just above the confluence zone. Our take-profit target is set at the next significant support level. Section 5. Conclusion. Your path to market mastery. By combining news sentiment analysis, technical confluence zones, and volume divergence filters, you create a robust trading strategy that empowers you to navigate news-driven volatility. Remember, this approach goes beyond simply reacting to headlines. It's about understanding market psychology, anticipating potential traps, and capitalizing on opportunities that others miss. As with any trading strategy, practice and discipline are key. Start by backtesting this strategy on historical data, gradually transitioning to a demo account before risking real capital. Remember, every trader has their own risk tolerance and trading style. Adapt this strategy to your preferences and continuously refine your approach.